Hello guys, welcome back to another Lumby trading video. In this one we're going to be doing some in-depth stock analysis on PayPal, ticker PYPL. Reason for this is we have just come into a 52-week low and it's down another 2% today. So it makes some sense to do some analysis on this to see, is this a good buying zone, and if it is, where would our targets be? So firstly, as always, we start off on a clean daily chart so we can clearly see is there any gaps that need to be filled, because more likely than not, the gaps will get filled. So if it's a very clear gap, it's something we will use as a target and not so much as an entry. So the first one that stands out is this 229 level, which is obviously this clean gap here. And looking at the chart, that is really the only clean gap that I can see. So for the time being, that 229.50 is the only gap that we'll be paying attention to for the time being. Yes, something like this is a gap. For example, the close at around 215.75, and then obviously it didn't come back the next day to come and retest it, but they're not as clear to all traders and investors. So the reason we have these really clear ones and only trade or lock in profits when it comes into these areas is that whether people are looking for gaps or not, that is a level that will stand out to them, and you tend to see a stronger amount of pressure coming into that level. So now we'll go over to the flexible grid so we can see the standard deviations. And this is the main reason I kind of wanted to do some analysis on PayPal, in that it's a large cap stock. You could even consider it a blue chip stock, and it's come down to the third deviation. This is very unlikely to see, and when you do see it, it is considered a very good buying opportunity, especially if it's a stock you believe in long term. So with PayPal, the main kind of buying area is where exactly we are now, and that would be this 187 to 193, which, I mean, we have closed. We closed at 189, kind of in between the two levels, and yeah, this is considered a very low risk and a good buying opportunity, whether that is for a swing trade or investment. The only thing now though is if you're looking at it more from day trade perspective, we have already hit this level. We've had the initial reaction. So if we do quickly go over to a 1 day, 1 minute chart, we'll probably see how it came into this level. And we can kind of see intraday, it used this as a resistance near the end of the day. And you can see intraday used it as kind of a support. You did get that small bounce that you would expect to see. Didn't really hold off too much though. Bounce maybe 50 cents before continuing down. You'll see it retested it. That is something you tend to always see with these levels, when you'll get it at least a small bounce into the level, and then you know it's most likely going to continue down if it will retest the level on the way down. So in this case, bounced and then broke down, retested. So then you know, okay, it's probably going to continue down. And yeah, so right now it has continued down, but has since come back into these deviation bands. So even if you were getting it below 187, but anything below 193 is considered a low risk long opportunity. So it is something I'm personally going to be taking a long bias trade on it. Something probably have quite a wide stop on it, just because we don't even really know why it's selling off. I mean, if we go over to the news, there isn't really too much news on why PayPal just keeps falling. So this would make sense for an area where buying pressure will come in. So it's definitely something we're looking at. And worst case scenario, you would expect to see at least a small bounce here. We would expect to see a bounce to at least kind of the $200 level. The reason we have that as a target will be that kind of 199 on the half deviation, and then you also got the psychological $200 level. So even if PayPal was going to continue lower, you would expect to see at least a bounce to kind of around that 199 to $200 level, and then if it's reverses there, we'll carry on upwards, and if it's going to break down into an even lower low, then we would still expect it to come and reach that level. So it's something we will be looking to trade to as our first target, lock in some profits there, maybe even move our stop, and then obviously manage to trade from there on. But yeah, so for kind of first price target we would be looking at would be kind of that 198, 199, $200 level. And that would just be so we can near enough guarantee a win on this trade by kind of looking at profits at that area, or even at least just move your stop to break even when we come into that level. Now we will mark off the other deviations because we'll use these in two ways. Firstly, targets. If you're looking to lock in profits, these are usually good areas to be locking in profits. But also, depending on how you trade, obviously we all trade a bit differently. These could be levels if you're maybe looking to get a short, like a quick maybe scalp trade intraday. This will be a level maybe to be scalping short. And again, you could be scalping them long intraday by waiting for that break, exactly kind of what we saw today. For example, if you're looking to scalp long, you kind of wait for it to break through that level, kind of retest it, for example, like kind of that. And then you would expect to see its move. But again, depending on how you trade, you will use these levels differently, but we plot these out because these are just levels where you expect either buying or selling pressure to come in depending on the level. So obviously if the stock's going up and we're on these deviations, we expect selling pressure to come into these deviations. Doesn't mean they won't continue higher, but it is always a level to be wary of. And then if we keep breaking through these levels, we'll then come into that $229 level, which will be the gap fill. If we can continue past that, we then have the 234 and then the 244 as areas to be locking in profits. Something I would probably be out of totally by this point, unless it's more of an investment. And then if it's more of an investment, then obviously we can be locking in profits, or even if you're, depending on how you swing trade, could be looking in profits coming into statistical mean, and then even further at first deviations. Yes, you can look on screen and you'll be able to see where the further up deviations are, but the problem is there's not really much point plotting them now because deviations move. And obviously on the 4 hour they will move on every 4 hours, and on the daily every day. But it doesn't mean they'll move significantly, but by the time we get to say the $270 level, then they would have moved by at least a few dollars, we would expect. So there's not much point giving targets all the way at the 320s or 346, because by the time we get there we'll have an updated video on the new levels because they would have changed. So for right now we'll kind of only go up to that $300 level. And yeah, again, these are all the levels where we expect to see some movement. So again, depending on your trading strategy, you may use these levels different to me personally, but it doesn't really matter how you use them as long as you have a way to use these levels. So hope you enjoyed the video on PayPal. Hope to see you in the next one, and that's it. Peace.